Guys, welcome back to the channel. And today we're going to discuss crypto dividends make more sense if carried out in a certain fashion, right? So what do we mean by that when we're talking about receiving dividends in cryptocurrency? So much like what you would have in, what you might get with uh, traditional finance, whether it be the stock market, um, the dividends on some of your favorite companies out there, uh, paid by that company. Typically, when those companies are in profits, um, dividends are generally a winner because you don't really have to do anything for them but hold the underlying uh, company, security, what have you, right? In the case of cryptocurrency, uh, it may or may not be a security, right? When we're talking about um, dividends in a product like the Bitcoin MYK token, we're speaking specifically about the citizens dividend enacted into over the blockchain, right? So if you're not familiar with the citizens dividend, it was an idea championed by Thomas Paine in early America. He was one of the main brains behind the American Revolution, right? And many of the ideas of that time. And he came up with the idea of citizens dividend, where every citizen was entitled to share in the dividend, which makes a lot of sense if you think about it, right? It's not a new concept. It's something that's happened. Now, the problem in cryptocurrency is what we've gotten in cryptocurrency is we've gotten products that kind of create these dividend systems. And these oftentimes are products that carry very little demand, but they require upfront money. They carry very low liquidity, which is a chief problem in cryptocurrency. But there's just not a lot of incentive to participate in these products. Not only do they carry very low liquidity, but you don't know when they're going to crash out and burn. You have no assurances. You have no guarantees. Similar to, unlike what you get in the traditional market, if there's a problem with your investment, if there's a problem with the company itself, you can file bankruptcy, you can take them to court, and so on. It seems in cryptocurrency, products like this are just mostly risk to the investor, right? The person who's participating in them. And, you get your rug pulls, and they can end up with nothing. So, is there anything better that can be done in cryptocurrency to satisfy a concern like that to a certain degree? Of course, there are no assurances. There are no, uh, you know, there are safe, investments, so to speak. But with something like the citizens dividend being enacted out over the blockchain, investment isn't required. And that's based on something called Metcalfe's Law. It's based on the building of networks and value, and it's based on many factors that take it out of the normal realm of what we get in a pursuit like this. So if you look at something like the Bitcoin MYK products here, the inflation tokens like BIT, uh, as you can see what happens, and we'll take you to look at the exchange rate, all right? So little to no volume, that's to be expected, because what will happen is the value of the network builds up as more people come into it, right? They don't necessarily have to invest in it for it to become valuable. It just is a natural ecological situation that happens with it, right? But if you come down here to the market, right, when a order is executed, it's executed. If you look here at the price, right, it's, let me see, it's 1, 2, 3, 4, 5, 6, 7, 8 decimal points, right? So 8 decimal points, that is the lowest, that is the very lowest execution of that could be occurred on on this blockchain, right, with this token. But now think about what that means. And if this is carrying out the citizens dividend, right? That would mean that's the lowest transaction that could take place, right? The 8 decimal points to the 1. Now that might not sound quite significant, right? But what happens then is, what does that mean? That means at a price that low, that everyone can be given a dividend. Now I want you to follow me on this so you understand that, because what you've done is you've substantiated a value, no matter how low the value. Now you can award everyone the equal dividend. So some people might say, well, it's not worth anything, right, if you do it like that, because it's the idea of, if something's free, it's not worth anything. But is that really true? Let's think for example of something like a penny, right? Now, the idea of a penny right now is that a penny has uh, the value to create a penny is far over the the value of what it is, right? Think about that for a minute, because what it means is that when you hold a penny in your hand, right, it has the engraving of the minted date. It has designs on it. There was energy created in the press to make that penny. So a penny value-wise goes far beyond a 1 cent, right? It could be worth 5 times that, 10 to whatever it is. It's worth a lot more than a penny. Almost to the point a penny doesn't make any sense, driving the conversation that they should remove pennies from the treasury, from the mint, right? Hasn't happened yet, but people suspect it will in the future because it economically doesn't, make sense. But in cryptocurrency, it does make sense. Why? Because we don't have to engrave anything to create a unit of currency. Think about that. So what happens is, so where does the value come from? We're going to show you that in a minute, right? So what's happened is, now that means that everyone who's received the dividend, right, from Bitcoin and YK, who's received this equality of the value of a citizen, right? Meaning everybody got it. Everybody got the same amount. What's happened then is they substantiated the value that everybody's worth a certain amount of money in a dividend. So what you get traditionally in cryptocurrencies, you get kind of like this big pyramid, or you can get this, right? Where the people who first got into the project, they reaped all the rewards. After that, the value starts to crash. That's why you always see these cryptocurrencies crashing and falling down. So the value begins to crash. Now, the people who get in after that, much like how a Ponzi scheme would work, they start to lose all their value and money in this thing, right? Because the price they bought in, the cryptocurrency is not going back to that price. They have no value, no assurances, right? But if you've established a floor for the cryptocurrency, if this is the value of it, if it can't go no lower than that, then all you would need to do is at that market value, right, which we've established here in the video, because it can't trade any higher or lower than this value. With that, then that means that you're always going to have an agreed upon value. Now, what can you do with that, right? Now it's become like a traditional currency, meaning that when it's held by the merchants know it's worth this amount of money. Now they can trade their goods and services for it with other people. They have a new market of buyers, because now people who didn't have money to buy their products before now have the money through the dividend. Now, you may be asking, yeah, but what about liquidity? This is made up money like much other cryptocurrency. Where does the value come from? This is where it gets a little bit more complicated, but will make sense, as we'll show you here in a moment. All right, so here on Bitcoin MYK, a lot of the value in social media comes from advertising promotion. It comes from sponsors and such. So in the case of something like X, formerly known as Twitter, what you got was a sales price of $44 billion, right? Which is a substantial amount of money. But what that proved is, it proved that social media companies and content are worth a lot of money. So the significance of something like the Bitcoin MYK inflation token, which is free, is you can take it and you can use it. It has a innate value or inherent value of to use to basically put up promotion and advertising and things like that on a social media site, right? So it's like the money of the social media site, right? Something like X for being able to use the special products and services on X to get the blue check marks and all that. You would use you buy these memberships, you pay whatever it is. And there's a similar thing you could do with the Bitcoin NYK inflation token. Now, what that does is that substantiates an agreed upon value for what the cryptocurrency is worth. Now, once we've established that it has an inherent value, right? Now we can move on to when it's distributed to the network users, right? Now we're able to establish that what the value of it is, right? And because of the liquidity challenges, it keeps the price stable, right? So that's good for it to be used in any other fashion. So in a strange way, the sale pressure, right, that's put on the token keeps it stable, right? And you understand if people can agree something is stable, then a lot of things can be done with that cryptocurrency. Now, of course, the argument could come up of is the value truly there? Can I trade this out for something else? In theory, you can because the value would already be established. Now, of course, an argument could be made about liquidity as to say, well, at the speed at which I want to trade this out for Bitcoin or cash or gold or something like that. But that will only matter in the framework of outside the network, right? As long as there's trust in the community about the cryptocurrency, you would be able to, in theory, intertrade that Bitcoin NYK token. And at the very least, you can always use it for promotion and ads. That can be, basically, it could be traded for that value at any time, right? So there won't be a limit to that. Of course, I think the most compelling argument for an approach like this, which makes more sense to me, would be as opposed to the other products and cryptocurrency and services we get, right? For example, if I were to buy Bitcoin, and let's say I bought Bitcoin at $100,000, right? And I paid $100,000 for a Bitcoin, and then Bitcoin dropped to $50,000, right? I would have lost all of that inherent value immediately with no hopes of getting that back ever, right? Unless the price of Bitcoin turns around and goes up, which it could, or maybe it doesn't have to, right? Whereas it would be a little bit different with the Bitcoin NYK inflation token, which would basically mean that it's always going to be that value on the exchange, off the exchange, right? So it's never a question of is it valued at X. It's a question of can you can the rate of transactions keep up with the demand for you wanting to move it out? But again, that could be offset by merchants who agree to use the cryptocurrency, because then what can happen in that case is then the merchants would have a lot more new customers, and maybe some merchants would be able to await payment, right? Like many merchants sometimes they may not collect the payment for 30, 90 days, right? It depends on the setup. And in some cases, some merchants go longer than that. Some merchants might give you a credit that allows you to go a year before you have to pay for something. Now that could merchants who would accept Bitcoin NYK inflation tokens, they will not only have a great new large base of customers, right, who would pay with that, but if they could offset their transactions for a year, or their settlements, right, for probably a better word, they could potentially earn a lot more for that year. Just in theory, right? This isn't financial advice. This isn't, economic 100% true theory, but just based on the facts of us being able to establish a tradable price that is pretty much stable to that price due to the sell pressure, creates an interesting dynamic of stability. That's the only point we're trying to make here. And it creates a system that is always going to be valued at something. And within that system, it creates what would be a better situation for people who trade the cryptocurrency, because what it would mean is that the money, it should remain fairly stable, the money that they put into it, right? Or the activities they do, Again, as the network grows, the value of the network would become relative to the value of the cryptocurrency. And so there is a time factor on the growth of the network, making that value potentially more than the what you get in traditional cryptocurrency, which could be going flatline into zero. You wouldn't be able to flatline value-wise to zero. So there's a lot of advantages to this. Now, of course, again, going back to the going back to the idea of liquidity, right? It was then began to feel kind of like fiat currencies, right? It'll be like if I gave you $1 and you say, okay, well, I want to go change this out for gold bars. And then you realize you can't do it because it's not enough gold bars to change you out for dollars, right? There's a similar situation what happens with the inflation token, right? If the ecological system we've created, if the merchants and people participating don't want to trade goods and services for the cryptocurrency or trade it out for another cryptocurrency, then that would mean, obviously that, that it won't work, right? Of course we can set it up with the liquidity pools on exchange and so on to see where that goes from there. But all in all, it doesn't create the the best situation for liquidity issues, right? But if you believe in the idea and it makes more sense to you that your value line is protected, as to say, I have this much of the cryptocurrency, right? Also, there'll be a lot more incentive for people to get in, because as you're receiving this dividend every month, as you put money into the cryptocurrency, or if you trade it, or the speculators do, whatever the case may be, as that happens, it makes it more possible for you to be able to extract that dividend monthly, right? So that means that there's a lot more incentive if I know that I'm receiving thousands of dollars per month on a crypto dividend, right, by everybody participating in it, over, if, I'm taking a risk on some cryptocurrency where I could lose over half my money in a day or more than that, or whatever the case may be, right? Also, you have the advantage with a system like this of, even if you didn't want to put money in, you could just use the social network, because what will happen is as you use the social network, then it becomes like every other social network, right? Value in it within itself, right? And of course, that value trickles down to the value in other ways, and the belief in the platform grows with that, right? So it's a very simple but complicated theories this is based on, like Metcalfe's law and things like that. And there are many uncertainties, and much like any other cryptocurrency. But I think the point is, in a crypto dividend, right? In order for it to be sustainable and you to be paid every month in that dividend, right? Not only would you have to have the tokens, but you would have to have the value, and the price would have to maintain a certain level. In our case, it doesn't have to do that, right? Because the it's at the lowest possible exchange rate it can go to on the market, right? And at that point, which it becomes tradable for advertising, promotions, and uses of the site itself, right? So it will always have a value in the use within the network itself, that can be of tremendous value to whether it be products or services or businesses, right? So very interesting stuff. This is something like unlike I've ever seen in cryptocurrency before. You're talking about receiving substantial amount of value in these cryptocurrencies every month, hundreds, thousands of dollars every month just for signing up. And even if the liquidity isn't there, you have the ownership and basis of the cryptocurrency of the platform itself, in which you're able to then basically have a certain amount of control that you wouldn't have in traditional cryptocurrencies, right? So I think that's all very interesting. I think it's unlike something we've ever seen before, and I think in the future we're going to see uh, many new economic models merge up like this, especially with the threat of automation, robotics, and so on. All this stuff's going to be very, very important, guys, into the system we're going into. I think the most compelling argument for an approach like this, beyond money, beyond the liquidity, beyond is just the fairness of everybody being able to have the same amount of ownership in the network itself, meaning everybody gets the same thing every month, right? So whether the value goes to zero in a platform like this or it goes to several trillion dollars, uh, you will still be getting the value you're going to get either way, right? Now, of course, you can go in and you can buy more of it like any other cryptocurrency out there. You can speculate on it. You can do all those things, but you have to keep in mind by doing it that way, you are subjecting yourself to a great amount of risk because liquidity is going to be very hard to get. And the value of the cryptocurrency probably is going to go on change. It's probably going to end up being like Tether or something like that, right? But the thing is, you'll always have the bonus and the plus side of the dividend and a greater chance of getting the dividend. So just a wild example. This isn't an accurate example. This doesn't have to be a true example. But let's say if you were going to get a $1,000 per month dividend, no matter what, you're going to get that value in the cryptocurrency, right? Well, what would happen is, let's say then you invested $1,000 in there, right? You put $1,000 in, but you put the $1,000 in once, and by you putting that $1,000 in once, you're expecting to get $1,000 back every single month, right? But let's say you put $1,000 in, and it dissipates, and you get nothing back, right, for the first year. Let's say you get nothing back for 5 years from that $1,000 investment, right? Nothing happens. You 5 years in. Then year 5, you get $1,000. You get a $1,000 dividend at year 5, and then you proceed to get that for the next year. So what's happened then is you put in $1,000, but within 5 years, that $1,000 has brought you $12,000. That's a wild example. That doesn't have to happen. Something crazy like that could happen, and it could be way further than that, go further than that, or it could be nothing like that, right? So those are important things to keep in mind. But the dynamics of this system, right? There's a great amount of rewards in something like this if it were to take off. If a network like this were to go to trillions of dollars in value, right, and you have tons of the cryptocurrency that are now with liquidity that are now worth a lot more than that. So that's all very interesting stuff. All very interesting stuff. And, with it being free to participate, free for people to log on, get accounts and all that, there's more advantages to winning in something like that than losing. So that's the point of that. I know some people will say, oh, well, the liquidity is not trading much and, all of those things. But you have to look at the fact that there are many cryptocurrencies that have a market value, that have volume, but it doesn't do you any good because the trading rate isn't higher than what you've put in. So you might be trading at a loss, right? So when you factor that a cryptocurrency has a lot of volume, but you're trading at a loss, you're still, in fact, trading at you're trading at zero, right? It would be no different if you got into this for free, and in fact, it might even be better because if you got into this for free, zero, you can't lose anything from zero. But let's say you got into this, and maybe you bought $100 worth of the cryptocurrency, right? And but you got $100,000 worth of the cryptocurrency, and the value of it dropped to below your $100. So you put in $100. Now you only have a value of, well, you would always have that value, but let's just say you can't get the $100 back out, right, within several months, right? That $100. So you're losing on time, but you're not necessarily losing money. But the thing is, if you were to do something like that with a traditional cryptocurrency, let's say you put $100 in, and that cryptocurrency went to 90 cents, right? Where you've lost almost the entire $100, right? You only have about $1 left. So you can see the tremendous differences in both models, why one would appear more attractive than the other, or which one would make great crypto sense. And the other part of something like this, I would say, is if you're one of those people who you want to take big risk and get big returns back in cryptocurrency, and maybe a product like this that's giving you a steady dividend each month doesn't allow for that, right? Then that's what building a diversified portfolio in crypto is for. Whereas I would see a situation where you could hold something like high risk cryptocurrencies where, they can give you a 10,000% return, something crazy like that most of us never catch, but maybe some of you all got lucky. Maybe one or two of you got lucky and caught it, right? You have a situation like that. Or you might just have what I like to call the blue chip cryptocurrencies, where you have a portfolio that's mostly full of Bitcoin and Ethereum, right? And then you might have something like a very risky cryptocurrency, right? Or one of these smaller altcoins that's not, giving you that much, or maybe some like meme coins like Sol or something, right? Might have a portfolio like that. And then you might have a little bit in something like the inflation token that's going to give you that guaranteed dividend each month. And the closer it gets to getting to that, you're going to be set with that monthly dividend of thousands of dollars per month that everybody's going to get. And it can kind of form a synergy, right? Economical synergy around these bigger cryptocurrencies and so on. So that might not make sense to a lot of you all, but rewind the video, let the idea sit with you, or just ask questions in the comment section. I'll be more than happy to go into detail about how a product like Bitcoin and YK makes more sense in dealing with cryptocurrency. And the great thing about cryptocurrencies in these economic systems is there are so many things you can do with them. They can become so flexible, and they can be modified and engineered to meet certain issues we want to solve in our standard economies and in the crypto economies. But that's all I want to say in this particular video. Don't forget to log on to bitcoinnyk.com. You can register an account free and already start receiving thousands of dollars per month in dividends from the Bitcoin NYK project. But that's all I want to say in this particular video. Until next time, as always, take care of yourselves and each other.